Good Friday morning, Market Chameleons, and everyone joining us for the first time. Thanks for coming by and checking out the Market Chameleon pre-market show. This man, feature Portolanic. How you doing, D?
Good morning, Will. How are you?
Great. You want to
Uh,
start with a disclaimer?
yep. Good morning, everyone. Before we get started, keep in mind, Will and I, Market Chameleon, we're not a registered investment advisor. We're not a broker dealer. We're not telling you what to do or just sharing ideas. If you need advice, call your RIA, call your broker. That's what they're there for, to give you advice, provide you with guidance. So there's the disclaimer. Yep. Let me share my screen. And as I'm doing that, quick note, anyone joining us for the first time, Will and I, we do these shows in the morning to try to help answer questions you may have about the Market Chameleon tools, the data, or analytics. If you want to come on a show, ask your question live, we do provide a link to Zoom on that live chat on YouTube. If you click on it, you come over to Zoom, click on raise your hand. Once you do that, you could ask your question live and direct. If you prefer to type your question, you can type your question into the live chat on YouTube. Will's watching it. He'll read it back to me. While we're waiting for more people to join us and for questions to come in, we'll start out with the pre-market report, see if we could get some insights on what's trading in pre-market hours. I do have some email questions to default to, so maybe I'll address those as well. And if you have questions that do come in, well, let me know. We'll see. We'll try to get to as many as we can today.
Perfect.
All right. So let's start out with the pre-market report. These are stocks that are trading in a pre-market hours. We have a list of our most active stocks, our biggest percentage gainers, biggest percentage decliners. Down here, I see 65 stocks made our percentage gainers list, 60 on the decliners. So right now, it looks, from this perspective, it looks like pretty neutral at the open. Let's take a look at the view from this calendar view. So we have this calendar up here that you could go back in time to see how the stocks traded in the pre-market hours. Right now, we're here, August 4th. So we're still, early on, these things could change. But so far in the pre-market hours, we have 473 stocks that are trading higher than the previous day's close, 286 stocks trading lower. As far as volume, we got 130.8 million shares trading higher versus 119 million shares trading down. And if we convert the volume to dollar value, $3.8 billion worth of stock trading higher versus 1.2 billion trading lower. So this kind of indicates a slightly more bullish sentiment at the open. Let's try one more thing before we move on to the questions. Let's come down here and we see a list of stocks that...
You there?
Yeah, Will, can you hear me? Will? Hello? Did I lose you? I'll keep going. I'm not sure if I lost Will. But we see here, there's a list of stocks. Some of them are low cap stocks, ETFs, leverage products. So if we want to narrow down this list, we could use the filters here up top. And I'm going to use this one in ETF, drop it down, and we get a list of ETFs to choose from. I'm going to choose the one SPY, the one up top here. That's the broad-based ETF. When you select it, the list below gets filtered by stocks that are holdings in SPY. And here we see 4 stocks made our percentage gainers list, 9 on the decliners. So that's slightly bearish sentiment at the open. So kind of mixed bag so far, different, depending on which way you're looking at it, kind of mixed bag at the open. So I'd say neutral. If you have questions, I'll take them. If not, I'm going to default to someone.
D, we had one question come in from Jackie.
Yep.
When I do a straddle search, there are no market price to limit the straddle price. Why is that? Yes.
Wait, read that again?
When I do a straddle search, there are no market price to limit the straddle price. Why?
I mean, I'm not sure I understand that question. Maybe
Jackie, is there any way you could come over, click the link up top and
yeah, show us
ask
what you're
exactly what
looking
you're
at.
looking at, or maybe send a screenshot as well to support it, Market Chameleon.
Yeah, I'm not sure I understand that question, so I don't want to try to
Stab at something you
try
don't
to
understand.
yeah
I get
try
it.
to guess what that means. Um, if there are no other questions, well, I'll just default to some of the questions I've been getting on the email.
Perfect.
Unless if Jackie comes on, let me know.
Yep.
Or clarifies it. Let's go to. So I had a question. Maybe I'll use SPY. I think so. This question was looking at the differences between the implied volatility and historical volatility, right? So I'm going to just kind of use SPY. So this here are two lines. One is showing the implied volatility, the 30-day IV, and the other one is showing a historical realized volatility. So, well, one of the things before I get into it, if you guys also ask when you ask questions, but if you email me things from third-party applications, I can't answer questions from third-party applications because I don't know what they're doing. I don't know their methodologies or their calculations, and I don't want to guess and explain to you, this is what, somebody else is intended, to show you. So, so I do want to, preface with that don't, screenshots from third-party applications. Once I look at them, I can't provide support for other applications just because I don't know what they're doing. I'm not an expert in them, and I don't have our developers don't look at their data. We don't know what their programs are doing. So anytime you do that, I'm not going to be able to provide support for something. And I get that. I'm just saying that because I do get that often when I'm looking at things. I'm like, this isn't from Market Chameleon. But I think that the question was, if I'm looking at the implied volatilities and I see a spread, I see that all of a sudden there is a difference between the 30-day implied volatility and the historical volatility. And then the question is, well, can I assume that something will happen in the future, right? Can I assume that if I sell high implied vol, it's going to come in, or if I buy implied vol, it's gonna go up? And the answer is that no, because that's not what this is showing you. Okay, when we look at the data, right, we're trying to answer a question. Now, and what question is this trying to answer, right? That's important to understand. Any type of analytic, metric, indicator, ratio, whatever you're looking at, it's important to understand what you're trying to answer with that question. And then you have to decide, how do you use it going forward, right? So this is not telling us to make an assumption about what's going to happen, that volatility, if you buy today, it's going to go up, and if you sell it today, it's going to go down. That's not what this is indicating to us. What this is doing is answering a question, and one of the could answer several questions, really, but let's go through the questions. And when we look at it, the implied volatility, right? The questions about implied volatility, and we say, okay, today the implied volatility is 13.3. And what we know is that the market itself, right? The market, whether it's options or stocks, are forward-looking indicators themselves. The market is already a forward-looking indicator. It's priced based on future expectations. Okay, so a stock is priced based on future expectations of earnings. How well will it do going forward, right? That's what people are pricing the stock. If they think that even if you think that this company was great for the last 10 years, but you think that it's going to be obsolete next year, you're not going to give it a premium, right? And if you think that the stock performed poorly in the last 10 years, never made money, but all of a sudden you think finally they've completed their research and development, they came out with this great product like ChatGPT, and now you're going to give it a huge premium going forward, because ChatGPT they may never made money, right? They've just been developing and spending, but you're going to give them a big premium because that's you're building in a future expectation. So then the question becomes, what expectations are the markets building in, right? That's what the question is. When I look at this price in SPY, when I look at this, price in GE or Apple or whatever, Microsoft, the question is, okay, what are the markets implying? What are the markets implying with this price? I see a price. My question is, what are they implying? What is that price telling me and indicating to me about future expectations? Because I need to know if I agree with those expectations. It's like thinking like this, like there's going to be a football game, and before the game is even played, you have odds, right? The odds are based on people's expectations of one team beating the other, right? So like sometimes, they'll say, oh, this team is favored by 10 points. This team is, favored by whatever, or, this team has a 60% chance versus a 40% chance. That's what the market is doing. It's pricing in an expectation, an estimate, a guess, a prediction about what's going to happen in the future, but they don't know what's going to happen. It's just the market's guess, right? Which could be changing from day to day. It's dynamic. So when we look at the implied volatility, the implied volatility is telling us that this is the market's guess about how the volatility in the stock is going to behave going forward. That's what the implied volatility is telling us. It's telling us at this time, the market is pricing in a 13.3 volatility for next 13 days, or I'm sorry, 30 days. And, so that's one indication. And then we want to say, well, how do we, analyze what the current state of the market is? That's what we want to know. I don't know if that's going to be exactly a third, the market could be exact on point. It could be overestimated. It could be underestimating, but that's where my analysis starts. And what I want to do is first analyze the current state of the market. Okay. The current state of the market. Do I think it is pricing it higher than usual or lower than usual, right? Or is it pricing it right in line? So that would be my first question in my analysis, because I have all these questions, in my analysis before I come even to a conclusion, right? So the indicator is not giving me the conclusion, it's giving me answers to questions that I have. So when I come down here, so what is this graph telling me here? Well, one way to try to understand the current state of the market is to compare what the implied volatility is currently priced, right? So the implied volatility is telling me what the market's trying to predict going forward versus, well, what did the stock actually do in the last 20 days? Is the market trying to tell me we're going to be going higher or lower, right? So that's why we're comparing a historical benchmark to the current market prices to try to understand where are we right now? Where are we at? Okay. So it's not in that doesn't mean you should assume it's going to go up or down. All it's doing is trying to answer a question in your overall analysis. Okay. So here, what are we seeing is that the implied volatility is at 13.3, and the stock moved at a 10.5 volatility in the last month, right? So the market at this stage is implying that the volatility going forward will be higher than we just recently witnessed. Okay, so that's giving me one, so it's answering a question, right? So the expectations are that we're going to see more volatility, or that's what's priced in, than we've just recently seen in the last month. What else is this chart telling us? Well, it's also telling us, if I just remove this, that the implied volatility, as we could see, in the last year, it's on the low end, right? So the current state of the implied volatility is on the low end of the year already, but it's still, high. It's predicting that the realized volatility will be higher than the last 20 days. Okay. So now I have a couple questions. We're on the low end, but we're on the low end, but we could see that even though we're on the low end, we're still trending above that realized volatility. Another thing it's telling me is like, well, is the implied volatility at how much of a premium are we talking about versus the realized volatility? Is this extreme or not extreme? And, if we look at this chart, yeah, they do diverge. They deviate some, and we've seen areas where they've had bigger gaps, right? There's a gap here, but it's not an unusual gap. We've seen these before, right? We've seen these gaps before. And usually, when we've seen these gaps, what happens, right? Like, which one leads, does the implied volatility lead the realized volatility? So those are the questions it's answering. It's not telling you, where we don't know where the implied volatility. Ultimately, we don't know. It's like trying to guess, what is the score of the next football game? We don't know, but it's letting us analyze what is the state of the current market, and can we use benchmarks to, different benchmarks to answer these questions, because that becomes important in our analysis, in our decision making. Okay, as we build up, answers to many more questions. So that's kind of like what this is implying, unless I had a different question, a follow-up if the person is listening, but this was in an email and I'm just trying to describe to you what you're seeing here. Okay. I'm going to move on. If you don't have questions.
We did have a question popped back from the first question related to straddles.
Okay.
From Jackie. He said, I want to limit the total cost of the straddle to under $5. He hasn't found a way to do that in the scanner. Is there a way to scan for straddles under $5 only?
I mean, which scanners he using?
Jackie, let us know what scanners you use. And best thing would be to come on click that link, come over live, Jackie. That way you can walk us exactly through what you're looking at, and then maybe we can guide you if there is an option to do a screen exactly the way you want it. So
Yeah.
there's so many tools and features, it's hard to from that pick it out. But, all right, but if you want to come over, Jackie, let me know in the chat.
Right.
And that you've come in.
Right. And anytime, I mean, usually the screeners are sortable, so you'd be able to sort, by by columns, if you want highest to lowest. But yeah, if you know which scanner they're looking at, let me know.
All right, cool.
Okay. So then the next question, it had to do with I think it was on the block trades. Let me see. Sometimes I have a question, I'm not sure where they were looking. I have to find it. But
was that the question from Douglas?
Yeah, was it with I think it was on option block trades. And
I think Douglas was asking, please ask the significance of the block option floor trades as opposed to electronic options trades.
Right.
I've noticed that stocks with even small percentages of option floor trades seem to move faster.
Okay. Right. So when we, again, it's this is answering a question we may have, right? And the question is, when we see a trade occur, right? So we're analyzing a specific trade, right? And when we're analyzing a specific trade, we have there's lots of questions, if what was the volatility of the trade? What were the circumstances? What was the price? Was the trade did it look like part of another trade? Did it look like it could have been potentially a new trade opening? Was it rolled? So there's lots of questions you may have about it if you're analyzing a trade and you're curious about it. So one of the pieces of information is how this trade was executed. And a trade, it can be executed electronically, which most of the time they are executed electronically. But there also is a way to negotiate a trade with human interaction, right? Through phone calls, through negotiating with different counterparties, and then coming to an agreement. And when you come into agreement, you could put up that trade on the floor. And the floor trade could be customer to customer, it could be customer to specialist, customer to market maker, it could be even market maker to market maker, it could be market maker to specialist. So the way and when it's negotiated, right, that in those ways, when it's negotiated and when two people come to an agreement and they say, okay, let's come up with a price that I'm willing to do this. Because remember, electronic is, you see a quote and you could take that quote, right? Or you're entering in a trade, and on the other side, you may get filled or not electronically. But this is more of human interaction. This is happening, on the floor of the exchange, where probably brokers are involved, and the two counterparties had to get matched up, right? So this had a lot of human touch. That's what it's saying. There was a lot of human touch in this floor trade, and we don't know the counterparties, but this is the way it was executed, and that gives us a little bit of a different information, right? Why were they doing this? What's going on? Because there's two parties, they both looked at it was beneficial to both. What are they doing here? Here I'm seeing, like, I'm just looking at these floor trades, and just from experience, to me, some of these look like, these are being done. Like, see here, the IB trades. This is being done at parity. Okay, so these are like stock replacement trades. See all these are all 99 deltas. So just from experience, what's going on is that right away, having this information, the floor trade and these are two counterparties that are doing these stock replacement trades that I could start to infer maybe what's going on is it's an interest rate play. I'd have to look deeper into it, but a couple things are giving it away that these are deep in the money, right? So deep in the money trades rarely happen, right? You don't see those actually happening a lot. Most of the trading is around the at the money or the wings. So when you see deep in the money trades, this is a different type of trade, right? This is usually for a cost of carry, a interest rate, a dividend play. It could be a corporate action, but these are different types of trades that are happening for different reasons. And those are right there. The two takeaways right here is all of a sudden I'm identifying that this is a different type of trade. These are not directional trades, okay? Because if you're a directional trade and you're trying to, get something quickly, you're probably not negotiating this between, different broker trying to get it up, right at parity. These are, things that, in my opinion, have to do with the cost of carry. It's like a stock replacement because these are deep in the money being negotiated. So that kind of information now lets me eliminate, what's going on here. Maybe it's of interest to me, maybe not. Once I know what's going on, I could move on. But that's the idea behind it, is you're taking pieces of information and you could quickly make an assessment, especially from experience. Okay, I see what's going on here. And then you move on. So let me see if there's, right. Probably because there's open interest in here. Maybe that's why the people are doing it, so they could carry this trade and earn interest, right? So if you sell deep in the money put, you sell the stock against it. And if you feel like that you're hedged off, you could sit there and earn interest to expiration, right? So these are the types of things that are going on. Again, that's the takeaway. And this is a quick analysis, right? I don't know for sure. This is my guess, but this is the most likely thing that I think is occurring here. I have another question, but we're right up at 9:30, Will.
Yeah, we can use that question on Monday's show. Now, remember, everyone, on Tuesday at 2 p.m., we have our monthly webinar with Interactive Brokers. You're going to have to go on their website to register for that. I'll put that link in the chat. Great job, Dima.
All right.
I wanted to share something before we go, because one of our regulars was asking about I mentioned I was coming out to Canton for the Jets game.
Yeah.
I figured the Chameleons deserved a picture of that. Was us at the Jet game last night.
Oh, your brother right there. I see your brother.
There's my brother and our two sons. So we came all the way out from Philadelphia area to Canton, Ohio with the kids for Joe Namath and Darrelle Revis to go into the Hall of Fame, which for Jet fans, it's about the biggest thing that's happened in the last 50 years. So other than Aaron Rodgers being signed in the offseason. So it was a fun night last night, and the festivities continue with the gold jacket tonight and then the ceremony tomorrow. So fun weekend for the McBride brothers.
And before we go, just remind everybody we're doing an Interactive Brokers webinar Tuesday.
On Tuesday at 2 p.m. It's our regular scheduled Interactive Brokers monthly webinar. every second Tuesday of the month. I will put it in the link on the way out.
Okay, everyone, thank you for joining. Stay safe out there. Have a great weekend and hope to see you guys on Monday.
Great. Have a great trading day, everyone. Have a great weekend. Thanks, D. Bye-bye.
Thanks.